Perfect. So I was at RBC PHN Investment Council, so working in the wealth management space for about 4 years after I graduated. I was really enjoying it and loved the team I was working with, but I knew if I had stayed there, I could see the next steps I needed to take every moment along the way. I knew in 2 years I had to reach that goal. I knew where it would get me and so on and so forth. And of course, I'd been following Wealthsimple in the wealth management space because it was making such an impact. And I actually just saw a job posting on LinkedIn for a Wealthsimple relationship manager. And I had never personally really qualified myself to work in fintech. I'd never thought I'd work at a tech startup. But after going through the interview process, realizing what a culture fit it would be and how exciting the opportunity was, I just took the jump, of course, and joined Wealthsimple. And it's been about 1.5 years now to this point. But yeah, I just started my career at RBC and decided to make the leap.
Awesome. Matt?
Yeah, so I started my career at RBC in 2005. It was sort of in the heyday of hedge funds and a lot of capital inflow into Canada. So I was, I think the first co-op student they actually hired on the trading desk. They thought I was an MBA grad for some reason, but I ended up fooling them during the interview, I guess, and got onto the trading desk in 2005 and ended up working in Toronto, covering global hedge funds, helping build a liability book of business for the bank, and ended up getting shifted down to New York during the crisis in 2008 and 2009, which was a pretty crazy time to live there. If you guys are familiar with the book Flash Boys by Michael Lewis, Brad Katsuyama was the head of the desk when I was working underneath him during that time. And so it took a couple years off my life, but it was really amazing to deal with some of the smartest people that I thought of in the world, helping them make investment decisions in very fast-moving markets. But I also found that I was disconnected to what was actually being done on a day-to-day basis. I didn't feel like I was really building anything while I was at the bank. It felt like I was just coming in every day trying to make money for clients and trying not to lose money for the bank. And I ended up coming back to Toronto in 2012 after surviving New York in the crisis and the flash crash and everything, and made my first investment into a tech company, which was Turnstile, which wasn't even a company at the time. They hadn't even started. It was simply an idea that I helped come up with the founder at the time. And so I wrote the first check into that company because I really wanted to understand how companies became public. What happened to get them there? All the things that we hear about is mostly public companies, but for a long time, you never really heard about the private side of things. And so I wanted to get into the private side of investing. So I made that first investment, and fortunately, after a lot of sweat equity and raising $35,000 checks from 75 investors, the company was off to the races and fortunately had an exit to Yelp. And with that sort of momentum and also leaving RBC and going to national and helping build out their US sales business, I really felt like I wanted to get my hands on something that I could build from the ground and not having all the resources around you from the corporate side. So that's when I ended up joining Street Context. You okay?
Yeah, so sorry.
No problem. It is dry in here. And I ended up having the most amazing experience joining Street Context, with Jackson and forging my way into the enterprise sales world. And so with that experience as being an operator trying to, hunt for sales without having any real guidance, was an amazing skill set that I thought I had as a salesman at RBC, but really didn't have. And so with that experience and seeing how companies and culture were built from the ground up, I decided to make some more investments into early stage companies and moved down to Boston with Street Context, where I was building out their US sales presence and started investing in early stage tech companies under the name Ripple Ventures. And sort of that's how this whole thing kind of came around. And now it's been a full-time gig.
Awesome. Thanks for sharing. Susan?
Hey guys, so I echo a lot of Matt's comments about what it was like to work in the bank because we worked at the same company, RBC Capital Markets, but I'm only about 9 months into my tech journey. I only just recently left the bank, but my story starts sort of in university. I've always been really techie. As you heard from my long, embarrassing bio, I'm an engineer by trade and invented a medical device and worked to take that to market during my time in my Master's of Engineering. And unfortunately, the market to which my medical device was catering to was not large enough for me to get rich, wah wah. But it actually triggered me and my interest into going into business. So I went to business school. And during my time in business school, I learned about assets and liabilities. Before that, I'd never heard anything about those. But all of the summer internships that everyone was applying for, were these jobs in finance, and it was investment banking, and it was trading, and everyone was talking about how sexy they were. So I followed the crowd like a sheep to these interviews and landed a job on the trading floor as a summer analyst, and I never left. I really enjoyed my time at RBC, and I briefly worked at CIBC as well. I love the energy of the trading floor. I love the quant aspect and the sales aspect. But over time, I realized that it was very rigid. It was a very large organization. It was sort of like a cruise ship. It was difficult to have your ideas float to the top and actually become something as a junior. It was difficult to innovate, and naturally, autonomy really wasn't there. And that's sort of what struck my interest in fintech. And when I was approached by a recruiter for CoinSquare, I dove into the interview process, asking myself, what the hell am I doing here? But I really felt like I fit with the culture, and I felt that their initiatives were really aligned with something that I wanted to do, so I accepted the job. And over the past 9 months, I've been building out the, with the help of a really great team, the institutional offering for execution of crypto, and then had the pleasure of working with a team to launch Canada's first tech-only investment management firm and 2 public ETFs. So it's been a wild ride, and I'm really happy I did it.
Thanks. Abraham?
How about now? There we go. So I kind of fell into finance by accident. I'm also an engineer, just like Susan. And in the mid-90s, so quite some time ago, I got offered a job programming mathematical models at a hedge fund. Now, I was a classic engineering student. I didn't know the difference between a hedge fund and a hedgehog, but it sounded kind of cool. So, I did a full tour of duty at this fund, climbing up the ladder, analyst, junior trader, senior trader, portfolio manager, all the rest of it, And then I fell out of finance. Part of my engineering roots reasserted themselves, and I felt kind of what Matt said, right? You're a cog in a machine, you're moving pieces of paper around, you're helping some rich people get richer and some other rich people get poorer. It's not really what I signed up for. And don't get me wrong, the work was super interesting on a day-to-day basis. But on a year-to-year basis, I felt I could be doing something different, and I wanted to build something. And what I ended up building was Quandl, and this was very much a case of scratching my own itch. As a portfolio manager, I was trying to make data-driven decisions, and it was just hard finding data. So I said, you know what? I'm an engineer. I can build a better solution. So, and I had a colleague who thought the same way. The two of us founded Quandl and attended sufficient number of FintechTO meetings, and that was behind all our success. So here we are.
Awesome. Fantastic. So I guess we'll start with Paige. In your own individual experience, speaking purely to your individual experience with the move, what were the benefits and costs that became apparent?
Yeah, definitely. So I would definitely say at this point, since I've made the move and I've been there for a bit over a year, so about a year and a half, the benefits have definitely outweighed the costs. For example, having the opportunity to speak at a FintechTO event would have never come up before. So that's very exciting for me, and to be on a panel with these amazing panelists here as well. So the opportunities and sort of the trajectory of my career has completely changed. I feel like so many more doors have opened for me that I never thought were really possible before. As I mentioned before, I could really see my future at the bank, and I understood where I was kind of headed. But that all has sort of changed at this point in time, and I don't really know where it's going, but that's the most exciting part of it. It's uncertain. I know that there's so many opportunities, whether it's within the sales account management side of things, or whether I move completely into a different area of the company or fintech in general. The benefits as well, I would say, are another one would be being surrounded by so many talented, incredible people. The culture at Wealthsimple and the people that I'm surrounded with on a daily basis inspire me every single day and make me really want to strive to reach all of my goals. So another one of the benefits would definitely be that. In terms of costs, I mean, I think moving to a startup or a fintech company that is newer, sort of on the street, it is risky. Again, it's uncertain. You don't really know where your career is headed, and that can be scary for some people. But I mean, when you do have sort of a long runway of your career ahead, and you know that you have the opportunity to accept all of these challenges and new opportunities, that it's very exciting. So I would definitely say that, yeah, the benefits outweigh all the costs in this jump here.
Awesome. And Matt?
Yeah, I mean, it was there was a lot of tangible things that you obviously can see that you're walking away from when you're working, in finance, like most of you are probably. There's that, golden parachute. There's these, vesting stock options you're walking away from. But at the end of the day, I, like Abraham, didn't feel connected to anything that I was doing. And I said to myself, I'm not married. I don't have kids. I don't have a dog yet. I think I can take this risk without really feeling too much pain. And if I do end up, feeling some pain, I'll be okay. And I was fortunate enough to work, at a big bank and in New York, and had some good runs. But what I was seeing with Turnstile was that this community of and culture that they were building with nothing, literally, I mean, we had only raised probably $400,000, was a community of people that were building something great, that were, spreading their wings and getting involved in a lot of different things without money and without sort of strong contacts, just by sheer will and sweat equity. And I really felt like I had been missing that part in my own, background. I had never really built something from scratch. I was leveraging the people around me and the brand of RBC to get it to doors. And then, no offense to Street Context, but it didn't open a lot of doors with the brand. We were going up against a Salesforce or something. So it was a lot of that part of just pure hustle, pounding pavement that I was missing in my own career that I wanted to take a chance on. And the benefits definitely outweighed the risk that I obviously was walking away from financially, in hindsight. But it is a big risk. And anybody here is probably thinking about doing that jump. I did it, and it was well worth it. But do it structured.
And Susan?
Yeah, I echo the comment about do it structured. But the good old cost benefit analysis. So for myself, the benefits were pretty clear. I didn't want to wake up at 5:45 in the morning anymore. I was interested in wearing jeans to work. No,
Should tell them about the bet when you first joined.
Oh, okay.
I'll tell them. When Susan joined, her and someone else were wearing heels. And I also wore heels before I joined CoinSquare. And I told them, you're not going to wear those heels. So we had a bet that if they wore heels for 2 months, that our CEO would wear heels.
6 months.
6 months. Our CEO would wear heels for a day. And I think Susan lasted maybe a week and a half.
Yeah, I was really, really excited to get out of the suit and into the jeans. But in all seriousness, I think you get a lot more autonomy and seniority than you'll get in the bank, over the next 10 to 15 years. My experience in the startup and fintech space was I had managers, mentors, and C-suite individuals tell me what the end goal was, but they never really told me how to get there, and that part really excited me. I had the autonomy to sort of go and build and decide what to do all on my own, and that was really, really attractive. I think some of the costs, like Matt already mentioned, the elephant in the room, obviously, sometimes the pay can be lower, and that's whether you're working for a startup for someone else or you go off on a venture on your own and use your own capital. Obviously, there's a cost to that. And I would say also, there are growing pains to scaling startups, and that's something nobody really talked to me about before, but it's definitely something to note. So a little bit of what Paige mentioned before, that uncertainty. But as everyone's already said, the benefits for me have all outweighed the costs big time. So
Yeah, change becomes the only constant. You two have both mentioned something about structure, applying structure to the move. I was just hoping you could maybe unpack that one a bit more, because I either it went over my head, or it could
Well,
use some
I think
clarity?
that, for Susan and I, we both were waking up at 5 a.m., heading down to the trading desk. There was the 6:30 meeting. There was the 7 a.m. meeting. You had like 5 meetings before the bell rang at 9:30. And then at the time of like 5 o'clock, the day was kind of over, and you punched your ticket and you kind of went home, or you went out for drinks and socialized. But it was very structured. Even though it was changing daily because of the markets and investors' demands and all these things, it was very consistent. And the lack of structure that we had at Street Context when we joined and other startups is, I embraced it as this was a great time to try to forge your own way and having an influence over the culture, over the structure, over the demands of the organization.
Yeah, I want to add to that. One of the biggest challenges that we found at Quandl with people joining us from large institutions and banks is, are you comfortable making decisions in an atmosphere of complete uncertainty? You don't know what the product is. You don't know what the market is. You don't know if people are going to go with your new design or your new pricing model, and there's no answers. Whereas if you're at a bank, honestly, if you do your time, you attend your 5:30 meeting and your 6:30 meeting, you spend 2 years as an analyst, 2 years as an associate, 3 years as a VP, it is all so mapped out for you. And there's nothing wrong with that at all. But I think that a lot of the folks who make the shift feel that they would like to explore what they're capable of in a less structured environment. Now, that's a different point from when you make the decision, you should make the decision to jump in a thoughtful and structured way.
Yeah, that was my comment.
Yeah, exactly. And we've all been talking about the elephant in the room. I'm going to just make it very, very blunt. Joining a fintech startup is not a high EV decision, okay? Most startups go bust. Even if you do, you're going to take a pay cut. There's going to be dilution. There's going to be ups and downs on the journey. You're probably going to make more money if you stick with your finance job over a 10-year horizon. Don't do it if you want the money. That's not the reason to do it. You do it because you want the challenges, you want the growth, you want the new environment. It is fantastically rewarding. But it is a risk. It is definitely something that you're going to have to deal with. And the way I look at it personally, we live in Canada. We're one of the richest, safest, most equal, most wonderful countries in the world. Compared to the 7 billion people out there, the 30 million Canadians have already won the lottery. Okay? We're all playing with house money. Take a risk. Live a little. Give it a shot.
So at CoinSquare, we've really, I think, done a good job of hiring a combination of people, both from traditional finance and from startups. And for me, who comes more from the startup side, it's interesting to watch some people adjusting from the financial services space. And I think for the most part, like Susan, we've done a good job of hiring people that have fit well into our culture, but we've definitely made some mistakes hiring people that can't work in our culture. And I'm curious, I'll just throw it out to the panel because you don't all have to answer, but what was the biggest surprise you faced joining a fintech company?
I'll give it a shot. Well, when I worked on Wall Street, if my boss said jump, I would say, "How high, sir?" And I would jump. In startups, people have opinions. And that's a good thing, right? You get much more diversity of thought and effort. And I think it boils down to supply demand. Like, I'm a junior analyst at a big bank. If I don't jump as high as I can, there's a queue of other people waiting to take my job. Startups are not quite like that. Good, talented startup employees are rare, and they all have options. And so you get a much more egalitarian culture, which I think is wonderful. It creates much more robust and resilient businesses and workplaces.
Yeah, I mean, for me, when I was at Street Context, I was in charge of finding new leads and sales and closing deals. And when you, like I said before, work at a bank with a brand, those doors open for you a bit easier to get those first initial meetings. And I felt it really frustrating to be pounding my head against the table every day trying to get meetings with people I used to cover from the finance side at the bank to go and work with and try to get, those guys to close and use our product. But when we had no brand and no reputation to stand on, it was very difficult to find really creative ways to reinvigorate those relationships. And I had a huge Rolodex of, clients that I would cover, that I would speak to every single day on the same sort of things. But then when you want to change the conversation, you kind of start to see who your real friends are. And that was a big wake up call for me. I thought I knew how to sell. I didn't know how to sell. I could sell, Amazon to anyone. But when you actually want to go sell a software that nobody's ever heard before, that's a real tough thing to do.
I totally echo Matt's comments about the friends clients thing. You start to find out who is just coming to your organization as a financial institution because of that brand and because they want deal flow, and who actually was coming to you for your content. So that's funny. But my comment about surprise would be back to structure. When I got to CoinSquare, I was a little bit shocked in, some of the hats that I had to wear. There was no back office, there was no administrator, there was no operations person who was taking care of, small menial tasks that you would never even notice existed at a large financial institution. And those were processes that not only did you have to do yourself, you had to figure out how to do yourself. So that was a surprise to me, but I think it gave me that look into what it's like to run a holistic business. So in the end, it's great. You get to build all of these processes, but in the meantime, you sort of have to figure out what you have to build.
Embrace the chaos is what I say. Embrace the chaos, because out of chaos comes routine. I mean, at our fund, at our incubator space, we have, 50 stand-up desks and 50 chairs. I built every single one of them, and I still take out the trash. So it's just sort of accepting the fact that there is no structure. There's nobody to do the dirty work. You have to do it yourself, and embrace it.
You have to wear different hats. Somebody asked me, so what's it been like? I've now been at Quandl, 6 years, and every year, and this is an example of the kind of growth that you get at a startup. Every year is different challenges, right? Year one was building this technology in the basement. Will it work? Year two was, okay, the technology works. Will anybody use it? Does anybody care? Year three was, okay, people are using the technology. Will they pay money for it? Year four was, okay, we found 3 people who will pay money for it. Can we get 300 or maybe 3,000? So how do you scale? How do you marketing? Year five was, how do you do institutional sales? Oh, and by the way, none of the problems go away, right? The year one problem with technology, you have to revisit that problem in year 3 and year 5 and year 7 because you're scaling, right? And then all through it, it's like you have to, how do you attract the right talent? I mean, at the end of the day, you're building a company, you're building a team, maybe a startup or any organization is nothing more and nothing less than the people who work at it. So how do you recruit the best people? How do you empower them? How do you give them the tools to succeed in their life? That is such a learning experience. 6 years of doing that is like 20 simultaneous MBA degrees, I guess. So yeah, it's a lot of fun, and you wear a lot of hats. But that kind of personal growth for me has been the really rewarding part of being in this space.
And then to just comment as well, I think my biggest surprise came from more of a personal standpoint. So even throughout the interview process at Wealthsimple, joining Wealthsimple, I constantly had this feeling of, okay, how did I get here? How did I make it this far? Am I sort of worthy of this position and whatnot? And I'll never forget, it was my first week at Wealthsimple, and we had a lunch and learn. And this woman came in to speak about mental health, and her whole topic was on imposter syndrome. So has anyone in the room heard of imposter syndrome? Many hands. This was the first I'd ever heard of it, but I had obviously had embodied all of the feelings and had felt them all throughout the interview process, even starting. And so it was really interesting to me to see how I felt in this sort of environment, and it was really surprising to me at the very beginning. But of course, over time, you learn to, I think, more so overcome it. It's probably still there in the back of my mind sometimes, even sitting here again on this panel with all of...
It's happening to me right now.
Yeah,
it never goes away.
It never goes away. I know, and that's the fear, I guess. But anyways, in this presentation she was giving, she said 70% of people suffer essentially from imposter syndrome, and it's only the high achievers that do. So when she said that, I thought, aha. But no, I truly was like, well, this really actually must mean something, and I know I've made the right decision. And even though I have these feelings, I know that I'm going to overcome them. But that was definitely the biggest surprise to me throughout the process.
Awesome. Thank you for that. The next topic is on, or the next question rather to this panel is on the topic of mentality or attitude towards work. So maybe we'll start with you, Abraham.
Okay.
Have you noticed any significant differences in the attitude or mentality towards work between your time in finance and now in technology?
Yeah, there's a few. I think, we don't wake up at 5:45 in the morning, but we still have to work pretty hard at a startup. Okay, they tend to, for some reason, startups tend to select night owls and not early birds. I think there's a different mentality towards solving problems. Startups, especially engineering and product-heavy startups, tend to be, they've got a solution or they've got a technology, and it's a trap that they can fall into, solutions looking for problems. Whereas people in finance or people coming from a finance background are much more problems. I have a problem, what's the solution? Not the other way around. People on the technology side of things can fall in love with their solutions and not really think about what the market needs. They can be impractical, not think too much about the commercial aspects. So in that sense, people coming from finance bring a much needed discipline to the way startups can work, which is great. The flip side of that is you can be too commercial, right? And to be too focused on the nuts and bolts and the bottom line. The other thing I found is how you deal with constrained resources. Startups have to be scrappy, right? We don't have a lot of cash, so you have to do more with less. People working for big financial institutions never have to deal with that particular challenge. They have other challenges. So there's a different, and that influences the way you approach problems, right? Can you just throw resources at the problem and make it go away? Yeah, you can, but that's an avenue that's not available to you sometimes at a technology firm or at a fintech. So I think the entire approach to problems is quite different, and I don't actually think that there's one or the other is superior. I actually think that the optimal solution is a blend. You have to figure out the right trade-offs for whatever particular challenge you're addressing.
I had never seen a whiteboard until I moved to Street Context. So I had never actually sat down in a room and whiteboarded a problem until I moved to a fintech startup. And that was changing for me, really big in terms of my ability to collaborate with people from different walks of life, from different backgrounds. Udesh and I probably had some whiteboard sessions over what we were doing at Street Context. And I'd never had that sense of collaboration with people who had never come from the background that I had come from in terms of working. And I really love that. I embrace that. I have a terrible sense of ADHD like most people in startups do. And so it really lent itself to changing from one gear to another. The other thing, though, is that scrappiness and the ability to have thick skin, which I learned from finance, really helped when I got told no a lot as a startup. So when I was out there in the sales jungle, I would get a lot of no's. And sometimes if you haven't been through a sales jungle before and being told that, and you don't have thick skin, that's a rude awakening. And I was fortunate to have experienced that a ton of times, being told to F off in finance. So that worked out well. But the rest of the collaboration stuff was all new to me. I loved it.
I'm sitting in between two wordsmiths, so I absolutely echo their comments. But to being told to F off, recently I sat in a big meeting across from a long-only manager, and he said, "It feels to me like you're a little bit telling me I'm stupid and don't understand blockchain, but with all due respect, you're probably too young to have seen a bubble." So that's what it feels like to get told no. And in a fintech startup, we all get told no on a daily basis. So, but overall, I would say to that comment is that the lifestyle for me is a lot better. Comments like waking up later, being able to wear jeans. Seriously, it's changed my life.
What about the attitude or mentality towards work, towards like accomplishing this task? Have you noticed any significant differences between the two environments? And it's okay if the answer is no.
It's amazing. Now that I have the fund and we have a bunch of different portfolio companies working at the incubator, the amount of little adjustments that we get to make to a company's direction, it's not forced or anything, it just happens naturally at the water cooler kind of thing, is so rewarding to see. I don't think my senior managers at RBC or National ever took my advice, ever took my opinion on what I thought we should be doing. Seriously. I mean, I would sit there and tell them, wholeheartedly, I think this is a stupid idea. But I wasn't, in a position nor power to be able to pull that off. I mean, sure, Abraham, you had the same situations at the hedge fund.
Yeah, I mean, the difference in ownership between a startup or a fintech and a big established franchise is night and day. Like you can actually see the difference in the stuff that you do. You can see it come out and change the world, maybe in a little way, but it actually comes out and sees the light of day.
It's not a cog in the machine, you're a spoke in the wheel, actually. You all need to work together.
And having the maker owner mentality too is so important. I am certainly not a founder of Wealth Simple, but even just having that maker owner mentality, there's an article that's called, I think, Effective Early Stage Employee, and it talks about the 5 levels of where you are as an employee. So there's level 1 where it's okay, perfect, cool, you've identified a problem, you've brought it to your boss, they look at it, and you've probably just caused them more stress because you're just identifying a problem they probably already know about. Then you kind of move up to a level 2 employee where you identify the problem, and then you come up with a few solutions, but no sort of concrete research has been done around it. Let's say you get to a level 4, you say, okay, perfect, here's the problem, here's the solutions, this is the one we should go with. And then you get to a level 5 where you say, oh, perfect, here's the problem, here's the solution, I've dealt with it, I'm just keeping you in the loop, FYI. And getting to that stage, even no matter what role you're in or what you're doing, is incredible. And having the ability to do that in this sort of environment is so much different than where I was before. You would never have the ability to work on that sort of problem and really push through the solution to what you thought was right. And it may not be right. This is how you learn from your mistakes, and you're going to screw up along the way, but that's how you get there and how you really make moves that way.
There still is decision paralysis at startups. Don't kid yourself. There, people say we need to be, data driven. It's not really data driven. It's data informed, and that is the problem that some startups still suffer with. We see it all the time, but I definitely think it's a bigger problem at the larger companies. From traditional finance, they're changing, as you see from all the updates in the Q4, but it's still a hard thing to push through.
Right. And don't get me wrong. It's not like startups have this magical managerial formula of everyone has ownership, and there is a lot of ownership, but there's also a heck of a lot of uncertainty. We're all kind of flying in the dark. So
and with uncertainty can come a power struggle.
It can, yeah. There's politics in every organization once you get to a certain size. Fortunately, there aren't established power hierarchies typically in startups, or at least, well, I read a blog post many years ago. It's made a big impact on me, where it said that it doesn't matter what your title is. If you're a co-founder, not the CEO, which is what I am, your true job is Chief Culture Officer, right? How do you're not building stuff, you're building the machine that builds the stuff. So how do you hire the right people? How do you create the right incentives? How do you empower them? How do you ensure a place where everybody is happy and working collaboratively and pushing in the same direction and gets along with each other and loves their job and is empowered and is using their talents and is covering whatever weaknesses they have? It's a lot of work. But the beauty of a startup is that you can actually influence that. You're not kind of stuck in the rigid framework that was designed 50 years ago.
I'd like to just flip this panel around for a second on Jackson, who's probably done more interviews than all of us combined in this room, especially from people from traditional finance. What's the question you get asked the most from a person in traditional finance when they think about joining a startup?
When do you run out of money?
Okay. Fair.
Very
fair.
Great question.
I find a lot of them ask about job titles. Yes.
Yeah, that too. Title, structure, like the management ladder, all these
They don't
concepts
ask about culture always, because they don't know what culture is mostly, or they've never seen it really.
It's funny that you asked me this, because I think that a lot of people from traditional finance consume Silicon Valley on HBO. They saw The Social Network, and they come into a startup with kind of like a preformed or preconceived notion of what it's going to be like. And while it is true when you paint in broad strokes, a lot of what you see represented in those media forms is true or represented in reality. there is so much more to the culture than what is easily conveyable through the media. The way that decisions get made, what the incentives and you know, what you reward inside of your organization has such a profound impact on it is who you are. Like you had said it earlier, Abraham. You know, a startup is the sum of the talents of the people that work there, and if you're lucky, a couple patents. But beyond that, you don't have a company without the people, and the people, you know, collaborate through the cultural infrastructure.
You had a comment about structure, reporting. And
Job titles and reporting is big,
Yeah,
but you know,
radical transparency is something that people have heard a lot about. I just heard that Uber, so I don't know who works at Uber, but they have a diagram that shows every single person in the organization and who they report to, top and bottom. So if you just started at the company as like an SDR or something, you can see all the way up to the top on who reports to who reports to who reports to who. I've never heard of that been done at a startup before, at a large scale startup, and definitely not at an RBC. I didn't know who my boss's boss's boss reported to. I'm sure I could find it somewhere, but it's not made open public. And that's something that I think startups embrace more, hopefully.
your question actually reminded me of a funny story. I was interviewing someone from a bank one time, and they asked me, how important is FaceTime? And I was like, FaceTime? I'm thinking like the app, like we use Google Hangouts a lot. And so I started answering the question, and they were like, no, FaceTime, like time in the office. And I was just like, that's not a thing here. I've never heard of that before. So it's that kind of stuff. But a lot of people here are thinking of moving from traditional finance into fintech. So I'd like to ask you guys, which skills do you think were the most important that you learned in traditional finance that you can apply to fintech, and maybe look at it from a lens of someone like myself who's been a startup employee? Like, what do you think those people are lacking that you gained in traditional finance?
For me, I think I get asked, a lot to meet with people for coffees and stuff who are thinking about making the transition. And I remember when I was sitting in that position looking to make the transition, and what I wish I did better, and now that I've learned, and my advice would be, structure your process for how you want to make the transition. So don't just go out there and sort of message people and ask them to meet a coffee and not really look up their profiles and not see who they're connected to on LinkedIn. Make the process easy for them. So if you're going to send an email, make sure you're sending an email with learning a bit about that background. Say, hey, Matt, I saw that you had made an investment in so-and-so. I'm thinking about joining X company in this space. Would love to pick your brain on it. If you have some time, here are 6 times available for you to click on to book a 10 to 15 minute call with me. Make it as simple and easy as possible, but be very structured with your process and how you want to make that transition. Keep a CRM of everyone you've met. There's free CRM extensions that Jackson can go through a list on of how to keep track of everyone you've met in your process and structure it on what they offer, what their role is, and then keep on top of people. If someone says, sorry, I'm not free right now, and hey, I may say that, keep on top of it and say, hey, you said you weren't free 3 months ago. Are you free now? But if you create structure around the process like it's a job, even though you're not getting paid to do it, you'll have much more success in the end, I think. Because that first coffee, that 10th coffee that you have may end up being with a person that gets you back in front of that first person that said no. It's a rabbit hole of coffees, but you'll get there.
And I think to Matt's point, just as finance is very incestuous, everybody knows everybody, so does everybody in fintech, and so does everybody in tech in general. The space in Toronto is very, very small. So if you structure the process correctly, like Matt was just speaking about, often specific coffees will lead to other leads, and just everybody knows everybody, so keep that in mind.
Yeah, I would also add to that from the recruitment perspective that every startup is looking for talented people. I don't know a startup out there that is not in the market for extremely talented people.
Hello, we're not interested in talented people, said nobody ever, right?
Yeah. So it's not like you're going to forage out there and force your way into this industry. There's an attraction, a magnetic pull on the other side, and you just need to find, the path of least resistance where your skills offer that startup something that they can't find somewhere else. And they will come to you as much as you've already come to them through your, rabbit hole of coffees.
Yeah. I want to bring that back to kind of what Leia started with, which was what are some of the skills that finance people can bring to tech startups that they tend to lack. And this is a bit of a generalization, but I think discipline is a good one, and discipline and follow through, because there are so many stories where you've got a website and an engineer, you tell that engineer, there's a bug on the homepage, can you just change a few pixels? And then 2 days later, he comes back saying, yeah, so I rebuilt the whole database backend, spent all weekend doing it, and now it's so much faster. And it has nothing at all to do with that front-end display bug. So staying focused and staying disciplined is actually something that is pretty rare and pretty valuable. And that's something that people in finance get naturally trained to do.
The spray and pray is ubiquitous with all startups. I think they all have to do it because they don't know where their first revenue check is going to come from. But coming from a traditional finance role where you're trying to shoot with a sniper rifle because it's already so competitive and you're trying to find that kind of niche where you add value is a good process to have in your back pocket when you're going to think about joining a startup.
Yeah, and at CoinSquare, we just implemented a meeting, and the name of that meeting is Action and Execution. And what I've noticed is through the whole fintech community is that there's a lot of ideas people, and there are a lot less people who actually get the job done. It's true. There are a lot of people with ideas and a lot less executors. So that's sort of the unicorn employee is the executor.
Okay, fantastic. Anything to add, Paige?
No, I just would echo that as well, Susan.
Yeah, very cool. All right, awesome. So to use our time wisely now, we have about 9.5 minutes here. We have some questions in the holster, but we want to give you guys a chance to engage. Does anyone have a question for this panel? And consider this specifically being a perspective from those who have moved from finance to fintech. If you guys don't have one, I'll go. All right.
I'd say this one might be a bit more for Matt, just based on what you touched on before, saying you went from selling really structured in a really structured environment to a really unstructured environment. What are some of the things that you did sort of to perfect that new unstructured sort of sales strategy? Did you read anything? Did you experiment with things? Like, how did you work around that?
Yeah, great question. I didn't have many resources around me internally to kind of think about how to structure it. So I really networked a lot with other people in the industry and try to find mentors. So I called my friends at Salesforce. I said, give me the Sandler playbook. How did you guys sell at Salesforce? And asked if anyone would be willing to be my mentor. I spoke with, our head of sales at Turnstile and said, how did you build your CRM up and your pipeline? And, how did you do all your drip marketing campaigns? And how did you convert customers who were dealing with these issues? I really pulled from everywhere I could. From people who were already doing it, no matter, what industry they were selling to. If they were selling medical devices, but it was a startup, they were probably going through the same thing. We have this thing at Ripple where we have a quarterly dinner series with all of our CEOs that we all get together and just sort of talk. And we have CEOs from healthcare to blockchain to, enterprise fleet, whatever, you name it. It's amazing how similar the problems are that they're dealing with every single month, every single day, no matter what. So what I would do, and back on Susan's point of this community is pretty small, I would reach out to other people in the ecosystem who you're not a competitor to, but you'd like to learn their skills, and I bet you if you buy them coffee or lunch, they'll open up to you.
You might be interested to know that there's actually a meetup put on by TechTO called SalesTO, which is a collection of people sharing what they've learned in their careers in sales.
Are you sitting on someone's lap?
I'm taking a knee.
Oh, you're taking a knee. Okay.
Taking a knee. One more question over here. This one's for Abraham.
Yeah, so you mentioned that the job as a co-founder is to build out the culture and the compensation. So how did you do that? Like, how do you go about figuring that part out?
Sorry, which part out? The culture or the compensation, or both?
Yeah, both.
So, what's our secret sauce? We actually do have we managed to distill our culture into a single sentence. And I think you'll find that a lot of successful startups go through this exercise of trying to define who they are, whether it's through an acronym or a shorthand or a values book. For us, it's build a company of talented individuals working productively on important challenges who are nice to each other. And there's 4 parts to that sentence, and all 4 parts are important. We want talented people because we believe we learn best when we're surrounded by excellence. We want to work productively. This is not a vacation. Progress matters, results matters. As Paige said, executors, right? Executors are so valuable. We want to work on important and inspiring problems, right? Something that excites us, something that is putting a dent in the world. And finally, we want people who are nice to each other because, frankly, life is too short to work with, I'm not going to say the word.
Assholes.
Exactly. So, and you try to make that very, very clear right from the beginning that this is who you're going to hire and this is what we stand for. And you have to back it up. If somebody acts as an asshole, you have to fire them. Okay? No, that goes without saying. There's no you can't make allowances saying this person's a top performer or they didn't know what they were doing. No, you have to be pretty firm about it. You have to live your values. Culture is a lot more than beanbags and foosball tables, right? Culture is about values and finding people who are aligned on your mission. As far as the compensation structure is concerned, the thing that we find is pay people well, but don't try to buy loyalty. That's not the way startups should work, right? You're not competing with people. You're not competing to put the highest paycheck in front of them. And people who go looking for the highest paycheck are probably not your ideal employee either. So give them a compensation package that is good. Make them feel valued. Make sure that they're well rewarded for success. But don't buy people's loyalty. That's not the way you go about it.
Anything to add to that through your own experiences?
And to be honest, compensation comes in a number of different ways. Like obviously the money part is the most important to people. Like they need to feed themselves, but internal recognition, external recognition, these are all things that help make employees feel really valuable. And with the millennial and tech community, these things also seem to resonate really strongly with them. So I would say that's another point.
Any other questions? Oh, you got one here.
Hi, this could come from anybody on the panel. So I'm coming from government, so I'm way over my head here. So the question I have is related to mentorship. But what do you look for in a mentee? Basically, like, how could I get one of you to become my mentor?
Good question. I think it's very important, as I mentioned earlier, to have structure in what your requests are from people before you ask them to be a mentor. So back to, is it Zach? Zach's question was, how do you get sort of the resources or the playbook to follow when you're on an island by yourself? It's really important that you think about what it is you want to achieve in terms of what you're looking for. GovTech in itself is a really big industry with a lot of private capital and a lot of private enterprises. And so you're not that far out of left field asking for someone to be a mentor, even if you are in government. But it is really important to focus on some really hard things that you are looking to get better at. Is it networking? Is it trying to find a specific job? Is it trying to come up with new ideas, find a co-founder? Like, the spray and pray in networking is not a good idea. It's really important to have some key metrics that you're trying to achieve when you find a mentor, and doing research on people and not asking them to give up all the information first. Be very targeted in what you are looking for.
Yeah, I'd love to add to that part about being targeted. So when you're asking someone to be your mentor, you're really asking them for their time. And the time is the single most limited commodity that anybody has, right? So, Faiz, I know that you work for a design firm. So it's like a design process, right? You want to reduce friction. Don't waste time. Be very, very targeted and specific. I'd love to learn about this from you. I can meet you for a coffee. I'll come to where you are, or I can do a phone call. Here are 6 time slots. Every single time I would respond to a very precise and targeted message. Whereas if somebody says, I'd love to pick your brains, can we meet for a coffee sometime? Like, that's such an open-ended question. I don't know if I'm signing up for like 3 hours of like philosophy or what is that? Whereas if somebody comes to me and says, I've got this really, I need to learn something about SaaS-enabled marketplaces, or going from a prosumer from small enterprise to big enterprise, that's an actionable request. And people are, the community is generous. People will spend time to answer these questions if you make it easy for them to do that, reduce friction.
And I think it's important to point out the difference between a mentor and a sponsor. So a mentor is somebody who's willing to share their knowledge and ideas and journey with you. And I think that very pointed questions are very appropriate in that relationship. And then a sponsor is somebody who has agreed to lift you up and open up their network to you and potentially help you with an employment opportunity. And I think both need to be very organic relationships. It's difficult to cold call somebody and ask them to be your sponsor. I think that these relationships develop over time. And so that's just something to keep in mind, mentorship versus sponsorship.
Thanks.
Hi. When I was a lot younger and I was working at a big company, right, and I decided to go into, and in those days, what they call entrepreneurship. And one of the things that they go through at the big companies when what they call your exit interview, right, where they interview and say, well, why you want to leave your company? And I was told that I have to say all the right things, because they say you don't want to burn your bridges behind you, because if you say the wrong things or you tell the CEO to FO, then you burn your bridges and you'll never be allowed back, right? So so that was like when I was a lot younger, right? So when you all came from like traditional finance thing, when you were decided to leave and go into fintech, how did you handle that?
Well, I have a good story on that one. So I open, sure, yeah. I left the bank, and my boss asked me if I had any, last kind of words, and I said, I'll never forget this. I said, "You see that trading desk over there? Nobody's going to be working on that in 5 years. It's all going to be taken by machines. Nobody wants to be on the last ship that's sinking." And my friend Russ, I don't know if he's still over there, worked at RBC with me. He left to go work at another startup, and had a great run there too. And it was just blatantly obvious that the people in the organization, they knew the writing was on the wall, and they never wanted to hear it. And I believed in radical transparency. It wasn't about burning bridges. It was about telling the truth about why this was not the right way to go. And if they didn't hear it from somebody that was leaving, they would never hear it. And so I just had to say it. I mean, I haven't called National Bank again, but
Yeah, I
told them the truth, and sometimes the truth hurts, but I didn't burn a bridge. They still have my mortgage.
I took an entirely different approach. But I would have loved to do that. But yeah, I was asked for an exit interview specifically because, the other elephant in the room is diversity, and it's difficult to keep, females in seats in both finance and technology. So that was a bit more of an eye-opener for them, or it raised flags, and they wanted to know why I left. I was pretty diplomatic about it, and in hindsight, I'm actually happy that I was, because I've had lots of specific interactions with my ex-colleagues at RBC Capital Markets. So it worked out for me that I didn't, give the finger on the way out. But of course, lots of people want to say that. I wish I did.
I would also echo the same comments on the diversity segment too. And where I was before, I was also on the millennial committee. So our focus was trying to attract millennial clients, but also retain millennial talent and attract millennial talent. So when they saw a young woman who was fresh out of school essentially leaving the organization, it was a big wake-up call to them to think, oh crap, what are we going to do now, and how are we going to get more people like this into our organization, and when are we going to see this mass exodus of them, because we know it's coming essentially. So it was a very candid conversation in terms of providing that true, honest feedback, but I think it was really eye-opening for them.
We're on this this topic here that got started by your question about mentorship. and this isn't part of the loaded questions that you guys were equipped with, so apologies for giving you a surprise. What is the best channels that you're aware of now that you're on the other side for someone looking to pursue an opportunity, or make the transition from traditional finance to fintech? What are the best channels that you're aware of? Like,
Besides FintechTO?
yeah, besides FintechTO and the newsletter and tweeting with the hashtag FintechTO.
I'd say that there's already been like the first or second wave of exodus from traditional finance. So you're not the first one to do it, and so it's easier to kind of reach out to people that have already made the transition and see what they went through on a personal level. But there are a lot of mediums out there that have people's experiences just blatantly out there. There's a lot of Medium blog posts that I've read of people's transitions. There's Built to Sell radio of people who like had businesses that they sold and what their experiences were like that I love listening to. I'm a big fan of the 20-minute VC podcast. I don't think there's any proper way to think about it, but again, it's about having structure around the process before you make that decision. To when the train is leaving, you don't want to have one foot on the platform and one foot on the train. You need to be ready to make that commitment, but do it in a very structured way.
Do it for the right reasons also, right? Don't do it just because everybody else is doing it. I mean, fintech is very hot these days, and that's fantastic for everybody, for the ecosystem, for the employees, for the team. But that when a particular area is hot, it does tend to attract bandwagon hoppers who say, "Oh, I'm going to join a fintech because it's the thing to do." Don't be like that, right? Do it in a thoughtful and structured way because it makes sense for you, because it's the right step for your personal career growth. And as Matt said, there's a lot of information out there, and reach out to companies. As Jackson said, every company in Toronto is looking for talent, so don't be shy.
I'm going to flip that question to you, Jackson, because you're obviously very involved in the space.
Yeah.
What would you recommend as the best mediums?
Yeah, my biggest recommendation would be let yourself get discovered. There are a lot of services out there that enable people like myself who hire at fintech startups to find people who are keen on the space, and they're severely underutilized. The amount of times that I'll see, I'll get an email in my inbox from someone who's thinking about the transition, and maybe they flip their resume over and they're looking to explore a fit. What an arduous undertaking that is for me, the seeker, to go out and find my opportunity. By basically just working through leads and running the numbers. When in fact, there are people out there that get paid to search for you that can't find you. So it may seem kind of ridiculous, but even if you can get yourself and your resume uploaded and represented on platforms like AngelList, doing your LinkedIn profile giving it a makeover and actually, flushing it out and helping you represent what it is that you do, and what you might be able to add to a startup on there is pretty crucial. And I know it's kind of a bit of a wasteland, but Indeed these days is also a pretty good place to get yourself represented, because it'll spread your impression out across that network, and who knows where that'll land. I think one of the biggest things is that if you're open to it, and if it's a journey that you're willing to consider, open yourself up to the world. Let people find you, because you might be surprised how many people are looking for talent just like yours. Wow, that was really motivational. Thank you, everyone. Thank you very much. This is